Hi, my name is Adam Sussman, Director of Research at TABB Group, joined by Will Rhode, Director of Fixed Income Research at TABB Group. Will, you've got your new report out, SEF Business Models, Zeros or Heroes. So the first thing that strikes me about the title is it's plural. There's a couple of different business models going on here.
Right.
Can you briefly run through what those likely business models are?
Well, they're going to be more electronic. That might be an obvious statement, but there is a voice trading provision being debated in the rules coming up, presumably for Thursday.
Yep.
But that said, there's going to be increasing degree of electronic trading.
So as
swaps.
they shift from voice, as you know, the interdealer broker market or the wholesale market shifts from wholesale or shifts from voice to electronic, how does that change the way they're going to charge?
Massively. The biggest thing is that the ticket sizes will reduce. That's the single biggest element, because big block trades get transacted in the wholesale market, and the commission structure is a function of the size. So instead of size, you're going to see more smaller ticket sizes, where you see, like in a dealer to customer electronic platform, much smaller ticket sizes, much lower commission rates as a result of that. Tangential to that is the standardization trend pushing through the swaps market. Then you get to open up the door to introducing per ticket charging fees, which are...
So just to back up, in the first, you're still charging basically based on DV01.
On spread.
On spread, right. As standardization comes into play, you're going to be charging more on the ticket itself.
Yeah, like a futures style charging mechanism.
Okay.
Mm-hmm. Yeah. So, but with that, of course, you hope to increase turnover, which would hopefully make up for some of the compression in spreads. But we actually see that the amount of turnover would have to increase pretty dramatically in order to offset.
So the first is fee
margins.
Structure, right? So based on spread versus per ticket. What else is going on?
So we're looking at sponsored access models. So the way in which buy-side firms would be able to access the liquidity that exists within the
Well, they have to be let
market.
in, but the question is how they're gonna get in.
Presumably, hopefully, a dealer member firm would provide them with access to that liquidity for a fee.
And how does the SEF? What's the SEF business model behind that? So the dealer's making money by providing access.
Actually,
I get that.
Actually, the dealer's still making much less money under that arrangement, because they themselves are also charging as a function of the spread. And then they're paying to the interdealer broker a commission fee for matching at the mid in the interdealer market.
Right.
So actually, the dealer makes a lot less money, but the SEF can actually maintain, still has an erosion of margins, but actually on that basis still gets a pretty good attractive revenue stream by charging dealers on both sides a fee to do the same business that they've been doing today, but just cheaper.
And so how do you think they're going to structure themselves? What are the different ways that they're going to, whether it's the matching engine, whether it's, sponsored access, what are the different models you see promulgating?
I think that will be an attractive one, the sponsored access model, because it gives the interdealer brokers the ability to sort of access the universe of buy-side firms without having the sales force to support that kind of effort. So the dealers,
in a way, they're not really there to a lesser degree. They're not going after their customer flow.
Right.
They're not completely disintermediating the dealer.
It's much more of a kind of a consistent theme. You could see central limit order books, especially if the standardization trend picks up. You could see more of an order book model start to evolve.
Yep.
And then with that, you could have maker-taker pricing, which we know about very well from the equity market experience. So that's another one. But I think SEFs will want to try to differentiate themselves by the variety of trade protocols that they're allowed to encompass. That's what really differentiates them from a DCM, right? So you'd want to see request for quote, request for stream, and given the infrequency with which so many of these fixed income instruments actually trade, a lot of this stuff will have to continue to trade by appointment until we see that ticket size reduction, high turnover and inflection rate and standardization trend really kick in for the swaps market.
So you've timed the release of your report well. We've got allegedly the SEF rules are going to be voted on in a couple of days. Mm-hmm. So what do you see as the most likely SEF business model to emerge post SEF, the finalization of the SEF rules?
I think voice will be allowed. Mm-hmm. I think we say there's a 90% chance that voice will be allowed. That will mean that there will be some kind of electronic audit trail. I think there'll be requests for 2, maybe moving up to 3. So some concession on the RFQ to 5. That will basically, I could envision the sponsored access model, and perhaps even some kind of form of open outcry environment for swaps trading.
And so what do you think that means for the challengers in the SEF space as opposed to the incumbents? Do you think that the rules coming out give advantage to one group or another, or not so much?
I think it's the liquidity begets liquidity story, and I think it's going to be difficult for newcomers that haven't got potentially a product that actually has some competitive advantage to the traditional over-the-counter swaps product.
Right.
That without that differentiator, it's going to be difficult for a newcomer to say, "Hey, I've got a new way of doing the business that's already been done," because it's the liquidity begets liquidity.
So the innovation is really going to happen on the product side, not so much on the business model side.
I strongly believe that. Yeah.
Excellent. Well, Will, thanks for joining us again. Will Rhode, Director of Fixed Income Research at TABB Group. Myself, Adam Sussman. Thank you for joining us.